Taxpayers contributed less to the government's coffers in the past financial year because of the pandemic. The Inland Revenue Authority of Singapore, or IRAS, collected 49.6 billion dollars in taxes, about 7.3% lower than the previous year. Now, among the reasons, weaker business activities and tax rebates that were given out to support companies. Brandon Tonoto with more.
Overall income tax made up the bulk of tax collected, but it's about $300 million less compared to a year ago.
Many corporates were impacted. Individual income tax surprisingly increased by 3%. I say surprisingly because obviously many people were impacted in terms of the jobs side, but I think maybe those were at the non-income tax paying bracket, the lower bracket, in terms of the gig economy. But many of the high-paying jobs were still preserved, I think, by many of the efforts by the government.
Property tax, betting taxes and stamp duty collections also fell, mainly due to weaker economic conditions and the casinos being closed. The next biggest tax revenue contributor, the goods and services tax, also dropped by $900 million. Analysts explain that's because consumers tightened their spending during the peak of the pandemic. Retail stores were also closed during the circuit breaker.
Government is opening up the economy, gradually removing travel restrictions, and I think that will boost the business confidence. And with that increased business confidence, profitability for businesses will increase, which will result in higher taxes. An estimated increase in GST from 7% to 9%, which is going to kick off anytime between 2022 to 2025.
IRAS says overdue tax obligations remain low in spite of the pandemic. It has provided extensions for tax filing deadlines and deferment of income tax payments. These are aimed at easing the cash flow for taxpayers affected by COVID-19.